On February 3rd, 2022, Meta Platforms made history, and not the good kind.
Meta has just had its worst day ever on Wall Street.
The Facebook parent company's valuation took the biggest one-day hit on record for the market, as privacy concerns and increased competition bashed Meta's bottom line. In one day, Meta lost $230 billion in value. That earnings reaction led CEO Mark Zuckerberg to declare a year of efficiency and enforce belt-tightening measures to get the social media giant back on track. On this episode of Growth Stories, we're taking a look at Meta's year of efficiency and if Zuckerberg's moves have paid off for investors. This September, Meta Platforms CEO Mark Zuckerberg took to the stage for the company's annual Connect conference.
At Meta, we are focused on building the future of human connection. And innovation to bring the future to millions or eventually billions of people is a big part of what we do.
Zuckerberg has reason to be optimistic about the future. Meta stock has surged roughly 150% through late September and is one of the S&P 500's best performing stocks, second only to chipmaker Nvidia. But to understand just how impressive Meta's growth has been in 2023, we need to rewind a bit. Just over a year ago, Meta stock was hit with historic losses. Shares lost 2/3 of their value in 2022 as the bear market's destruction ensued. The company saw daily users decline for the first time ever as TikTok rose to dominate the social media market. And spending on metaverse initiatives was eating into Meta's margins. Zuckerberg needed a way to address Wall Street's concern over where the company was headed.
My main focus is on increasing the efficiency of how we execute our top priorities.
Thus, the year of efficiency was born.
I think what it really was a way to sort of turn the page for the company.
That's Ryan Deffenbaugh. He's a tech reporter here at Investors Business Daily. Deffenbaugh says the year of efficiency was implemented to quell investor concerns about Meta's ballooning expenditures.
I think the idea with the year of efficiency was to have a very clear way to say, we've heard you and we're going to cut back on spending and focus on what we do best.
Those cuts resulted in the layoffs of 21,000 employees. Another goal of the year of efficiency was to focus on initiatives that would boost Meta's slumping ad sales, which are a critical component of the company's top-line performance.
Meta's core ad business, for one, was hurt significantly last year by changes that Apple had made to its privacy policies, made it more difficult, essentially, to gather data on users and use that data to target ads. And as part of maybe some ongoing efforts, Meta rolled out AI-powered marketing tools that made it easier for businesses to kind of rapidly test and put out new ad campaigns.
One of those tools was Meta Advantage, which utilizes artificial intelligence technology to maximize marketing campaigns on the platform.
It turns out that what Meta has been able to do with Advantage has ended up being one of its most successful product rollouts in probably company history.
That's Deborah Aho Williamson, a principal analyst at Insider Intelligence. Her research spans the social media sector and includes companies like Facebook, Instagram, Snapchat, TikTok, and X, the company formerly known as Twitter. She says Meta's Advantage tools help advertisers reach more people and have made the company a stronger player in the targeted advertising market.
One of the things that's really interesting and I think really compelling about Advantage is that it's really seeing a lot of good uptake among e-commerce and retail advertisers, which are a big part traditionally of Meta's overall advertising business.
That uptake, along with an improved economic outlook, has revived Meta's ad revenue. And Williamson says that the success of programs like Advantage could serve as the foundation for the future of Meta's core business.
When it comes to advertising, I do feel like Meta has an advantage in having a product like Advantage because of the way that it's been able to just smartly roll out these tools for advertisers and really help them to see improved results and get these advertisers to continue using Meta, even if they could go to another platform like Amazon or TikTok or even back to Google.
Another big contributor to Meta's comeback this year has been the growth of Instagram Reels. Reels was a direct response to TikTok's popular video format and allows users to post short-form vertical content to Instagram's feed. Meta said in its most recent earnings that Reels is projected to bring in roughly $10 billion in annual revenue.
That actually is really strong, and it's a pretty significant jump from what they reported last fall, which is about $3 billion. So the question, though, is where does that put Reels in comparison to TikTok? And the good news for Meta is that it actually puts it quite close.
Williamson says that TikTok will bring in just over $13 billion in ad revenue worldwide this year. But she cautions Reels could have some engagement issues to address.
Reels is driving time spent on Instagram, but it's mostly cannibalizing time from other areas of Instagram.
She says this cannibalization can be seen in the average view time metrics between Instagram and TikTok. Insider Intelligence estimates that US adults will spend an average of 54 minutes per day on TikTok, but only about 33 minutes on the Instagram app.
While we're seeing strong revenue growth for Reels and bringing it more in line with TikTok, what we're not yet seeing is that true huge spike in engagement that I think we would like to see in order for Reels to be a even stronger contributor to overall revenue for Meta.
The launch of Meta's newest service, aimed at Elon Musk and the platform formerly known as Twitter, is also looking to advance the company's growth strategy. Threads officially became available on July 6th and amassed 100 million users in just 5 days. Zuckerberg said the app's success was a testament to Meta's efficiency strategy.
We've already seen a number of examples of how our leaner organization and some of the cultural changes that we've made can build higher quality products faster, and this is probably the biggest example so far.
That was really a brilliant launch strategy because anybody who was an Instagram user could download the Threads app and immediately set up Threads and start to follow any of the accounts that they already followed on Instagram.
That's analyst Deborah Aho Williamson again. She says while the Threads launch was a win for Meta, the rush to get the app into the hands of mobile users left it without basic features, like search functionality and a web interface. Those missing pieces have hamstrung Threads' usage rates.
We saw data from an analytics firm called SimilarWeb that reported that daily active users dropped from 49 million in early July all the way down to just 10 million a month later. But right now, Threads hasn't lived up to its potential, and it's really, I think, kind of an app that's trying to find its way. And I think until Meta does a better job of telling people what Threads can be used for, it's going to continue to struggle to get those people to use it on a regular basis.
While Meta will continue to build Threads, it also plans to keep up investments in the metaverse.
Because I think increasingly, in our modern time, the real world is really this combination of the physical world that we inhabit and this digital world that we're building.
I think you can say that Meta is still very much betting on the metaverse.
That's IBD reporter Ryan Deffenbaugh again. He says Meta's collective losses on metaverse initiatives amount to about $40 billion since 2020. And the company warned investors on its recent earnings call to expect more losses next year. So why is Meta still trying to make the metaverse a thing?
This is a very long-term bet. And look, I can't guarantee you that I'm going to be right about this bet. I do think that this is the direction that the world is going in.
This is what they view as the future of where the internet's going. And, they don't want to be left behind, even if it, seems more speculative now.
Williamson adds that Meta still struggles to sell investors on its virtual reality initiatives.
This is a massive company on the worldwide stage when it comes to advertising revenue, but also still not fulfilling its potential and probably nowhere near fulfilling its potential when it comes to its positioning of the metaverse and its ability to generate real revenue from things like virtual reality and augmented reality.
Zuckerberg sees new innovations as the key to helping Meta unlock that potential.
We are incredibly proud to introduce Quest 3, the first mainstream mixed reality headset. It's the most powerful headset that we have ever shipped, and it allows you to blend the physical and digital worlds together.
And is hoping the excitement around artificial intelligence technology will translate to positive buzz around metaverse developments.
Even if it isn't a massive success, then at least Meta needs to show that They've developed some really interesting technology that will eventually perhaps get people to realize that maybe that metaverse that Zuckerberg has been talking about for so long might actually become not just a virtual reality, but an actual reality.
But as Meta looks to build on its gains and continue investments in new technology, Williamson says there are potential headwinds on the horizon.
Even though Meta's had really great revenue performance so far this year, it does get nearly all of its revenue from advertising, and its share of worldwide digital advertising is actually going down just a little bit.
Williamson estimates that Meta's share of digital ad revenue will be about 20.1% this year. That's slightly down from its 2020 peak of 22.7%.
TikTok is certainly digging into a little bit of that, but we're also seeing growth from platforms like Amazon, for example, which is very strong in retail media. So Meta still needs to really perform on all cylinders in the second half of the year to keep that revenue share of worldwide advertising staying where it's at and not go down any further.
She adds that progress in developing artificial intelligence programs will also continue to be a battlefield in the social media space.
This is an area where I think Meta really needs to continue to work on all cylinders. TikTok is obviously a threat not only to Reels, but to Meta's platforms in general and to attracting young people with video. And for all the talk about Meta perhaps launching Threads as a killer of Twitter, TikTok is really the one that Meta needs to stay focused on, because that is the far stronger company and app, and the one that has the potential to do more damage long term to Meta's business.